the Naira has continued its steady depreciation against the dollar at the official FX markets despite interventions by the central bank. Now, traders at Axis Bank say they expect the same sentiments as demand continues to outweigh supply. Senator Audu, fixed income trader at Axis Bank, joins me to discuss activities at the fixed income and FX markets. Senator, thank you so much for joining us today. Let's just give us a midweek review of the markets. Let's start with the FX market. Bring this up to speed and give us a better perspective in terms of this development we're seeing at the FX market. I mean, the conversation was that the CBN was adequately supplying the market with dollars, but we're still seeing demand outweighing supply. Tell us more about that.
Thank you, Esther. Thanks for having me. So for the FX market, the CBN has actually sustained its interventions. So the CBN intervenes every Monday for invisibles, requests for SMEs, and for FPIs, and they did that again this Monday. So the CBN has actually sustained its interventions and even increased its interventions on certain fronts. So we haven't seen a sizable depreciation in rates. We just saw a small depreciation yesterday by 75 kobo. The rates closed at 414.30. That's 30 kobo on the INA window, while the NFX rate closed at 413.30. So we expect the CBN to continue the interventions today. For example, there was another intervention for foreign portfolio investors. So we are seeing that supply increase, but the demand, as you rightly said, has continued to outweigh that supply. And
would you say that the major pressure point is from that backlog from the foreign portfolio investors that the CBN is still trying to clear considerably?
So there's a demand for FX on different fronts. So the FPI is one aspect of that. We also see demand from importers, from small and medium-scale enterprises, as well as for invisibles requests, PTA, BTA, school fees, those kinds of things. So the demand is mixed across different fronts.
Okay, bring us up to speed on trading at the treasuries market. So we did see a significant demand, particularly at the short end of the NTB curve yesterday, causing yields to moderate about 18 basis points, according to traders. But bring us up to speed on how activities are shaping up there.
Okay, so the major driver of that is the increased liquidity level we had seen last week. So last week, for example, we saw the FAC inflow come in, about 696 billion. We saw an NTB maturity of about 112 billion and about 105 billion maturing UMO bills. The only activities we saw last week that could take out some of the excess liquidity was the retail FX auction that held on Thursday and the NTB auction that held on Wednesday. So we've seen some of that excess liquidity spill into this week, and we have seen that lead to a bullish sentiment. So we've seen increased bids in the market, which has depressed yields across both markets, the T-bills and the bonds market. For the bond market, yesterday the DMO released a new calendar. The highlight there was that one of the bonds two of the bonds rather were replaced. So the old system had been that we had seen the 2028, the 2036, and the 2050 bonds being offered, but the new calendar took out the 28s and the 36s and replaced them with 26s and 37s, but the 2050s are still there. So what that has led to today is that we've seen some interest on the bonds that have been taken out. Those are the 28s and 36s, and those have been trading today at about 11.8 and 12.75% respectively. The 50s have remained in demand as well, and we've seen those trade at about 13.1%.